You have joined the meeting as an attendee and will be muted throughout the meeting.
Discuss the Intellect Design Arena Ltd financial results for the first quarter of the fiscal year 2026-27 ending 30th June 2026. The investor presentation and the press release has been sent to you and is also available on our website. Our leadership team is present on this call to discuss the results. We have with us today Mr. Arun Jain, Chairman and Managing Director, Mr. Manish Makhan, Executive President, Chief Revenue Officer, and CEO of Wholesale Banking. We have Mr. Rajesh Saxena, CEO of Consumer Banking, Mr. Banesh Prabhu, CEO of Intellect AI, Ms. Vasudha Subramaniam, CFO, Mr. Vikas Mishra, Chief Strategy Officer, and Mr. Deepak Dasrala, CEO of Purple Fabric. Besides, some of the other senior members of the Intellect management team, they are present in the call. Now, I hand it over to Manish to give his comments on the results. This will be followed by the comments of Vasudha. Thereafter, we will be in the Q&A session, where your questions will be replied by the senior member of the management team. Once the Q&A starts, you can ask a question by clicking on the raise hand, and then we'll unmute you and you can talk to the management. One safe harbor. I would like to remind you that anything which we say which refers to our outlook for the future is a forward-looking statement, which must be read in conjunction with the risk that company faces. With this, I request Manish to give his briefing. Over to you, Manish.
Thank you, Praveen. Good evening, everyone. Thank you for joining this Q1FY27 cascade. Our theme for this phase is growth by design. I think that's what we introduced beginning of this year and how we're doing. I'm going to focus on giving you some evidence of what growth is, and then going to talk about the algorithm which makes that growth happen. Our total income has reached 872 crores, growing 19% Y-on-Y. Licensing revenue has grown by 17% to 457 crores, and we've secured 19 strategic wins and expanded our pipeline to 13,000 crores. The number of destiny deals has crossed 100 for first time, and we have converted 7 during this quarter. None of these are isolated outcomes. They reflect a deliberate growth system connecting our research, platforms, priority markets, customers, and execution. Today, I will explain the algorithm behind this growth and how we are working to make it increasingly repeatable and predictable. Please go back to this. So, our unfair advantage on the platform. So, the two platforms which are creating the unfair advantage for our growth journey, eMACH and Purple Fabric, around which we have been making most of our investments and growing live. The data points of what each one of them are has been listed over here. Our moat is not one technology. These are two different distinct technologies. It's a combination of composable banking and AI which is making the difference in the world. It is our ability to reuse proven capabilities, reduce implementation complexity, lower total cost of ownership, and bring differentiated propositions to customers with greater speed and certainty. The question is whether this differentiation is producing commercial evidence. Our Q1 performance demonstrates that it is making a difference. We go to what's our core strategy, which connects all of this value. I think the first pivot of our strategy where we are making significant investment is AI first. And how this AI first is making an impact to our lives is, I look at it from two perspectives. First is external monetization. How Purple Fabric is creating standalone enterprise AI opportunities while increasing the differentiation of eMACH in broader transformation decisions. We are focused in selling PF as a platform and as AI first in all our eMACH stories. So each of the wins you see would have not been possible without either one of them. Financial institutions need more than access to a language model, which we hear a lot out there. They need an AI that can work with enterprise knowledge establish workflows, governance, frameworks, security controls, and regulatory requirements. The second value we've seen from AI is internal transformation. We are expanding AI adoption across engineering, testing, implementation, customer support, and business operations. Our objective is to increase execution capacity, shorten delivery cycles, and support operating leverage over time. Our second growth engine is focused execution in strategic markets. North America has become one of our most important growth markets, and we are parallelly pursuing our continued growth around Europe, Middle East, India, and APAC. Our third growth engine is productizing our domain expertise. Our portfolio addresses across wholesale banking, core banking, digital banking, lending, wealth, insurance, and commerce. Purpose-built propositions in each of these areas such as Islamic banking, custody, and credit unions allow us to address specialized opportunities with greater repeatability. This is power of true eMACH. Our fourth growth engine is strategic customer expansion. During Q1, we secured 19 strategic wins and completed 16 transformations. And over the past 12 months, we have achieved 61 wins. You would see the average of 61 over 12 and 19 in the last quarter, showing that the number of wins are growing. A strategic win is only a beginning. Successful implementation creates customer value. Customer value builds trust, and trust gives us the right to expand across additional products, business units, and geography. These are our 4 pillars of our growth algorithm. In Q1, like I said, North America is helping us make an impact. One of Mexico's largest banks selected eMACH CBX, and this is a franchise of one of the largest global banks, where the digital engagement platform on the corporate banking, wholesale banking side, across all lines of business was chosen. We had 6 credit unions in Canada adopting a digital engagement platform. This further reinforces the investment we made about a year ago in Canada, and our wins are continuing across that. It ratifies our investments and strategies consistently. Europe is where we have been winning enough before also. Another large top 5 bank in Europe, for their investment services and asset management side, they looked at our CBX, eMACH CBX, to make transformation over there. In Middle East, last quarter we had war had impacted us, but this quarter has been very large for us from a post-war for us over here. The war has also forced banks to really think through the infrastructure and actually are putting more investments to solidify and upgrade their infrastructure. So we saw a number of wins in Middle East from that perspective. India, our homegrown market, one of the largest financial services companies picked up Purple Fabric as a complete enterprise open business impact AI platform. So we're winning AI in eMACH as well as individual platform deals. That was a big, we had another 3 custody deals, which shows that wealth is coming into India, all supporting the market strategy. We won 3 large deals on custody side, further expanding our market leadership in India. From an APAC perspective, we had 2 deals across Southeast Asia and 1 deal in East Africa, further expanding our individual franchises over there. So you will look at, it's been a very balanced portfolio across markets, winning across all 5 geographies where we operate out of that. Our pipeline, like I said, grew 13,000 crores, 15% year on year, and we've crossed 100 plus Destiny deals. This is giving us confidence that our investments are in the right direction. Our results are proving that execution is backing where our investments are going. And we had 7 large strategic deal wins, which we had during the last year. This is statistics on our deal size band, about 50 crores, 29 deals. We have a varied portfolio. We're not singularly dependent upon either large, medium, or small deals. So balanced portfolio across markets, size of deals, and platforms. I think that balanced approach of what Arun has been consistently saying is that's the arena across products, arena across markets, arena across types of deals. So that's consistently making us remain consistent on that performance. The 20% promise, LTM basis, we're continuing to live up to that in that plus minus 2-3%. That's where our journey is currently. So what are the other additional markers of the success? Analysts consistently rank us number one, not across one platform. IBS is one of the most popular sales league table which collects data from everyone. And this is where they showed us our leadership of in the last 12 months period, who has been number one in winning deals across that. So this is a sales matrix. Going on to the next slide is a qualitative metric where the analysts on our capabilities are commenting upon how we are, where we are in the leadership magic quadrant. The industry awards confirm that our assets have been used and they made an impact, business impact, and the industry rankings and customer recognition. All these are proof points of why eMACH.ai is being adapted and why consistently recognition and around the globe we're getting these successes. This is the other proof point of, if we look at over the last 6-7 quarters, what our performance has been. On an LTM basis, we have been from Q1FY27, we've been consistently growing. This consistent growth is what we are looking at. I think we've always said, let's look at LTM basis. This is a proof point of that data being plotted to show on an LTM basis how our growth has been. Our investments are being done on the LTM basis. Our growth is around that. All proof points are around that. I think this would make each one of the investors feeling comfortable and confident that the support you extend to us is going into the right direction. Additionally, to continue building the market momentum, there's enough market events we participate in along with our sales marketing teams to ensure our brand is visible and is consistently celebrated. These events are now also markers for me actually to close deals as well as to make those last mile customer to customer references. So been very successful from them across. And again, you see it's a well spread out across all markets. So the balance of portfolio in all execution you will evidence from this. To continue supporting this, we are continuing to make again balanced investment in senior talent leadership around AI and our go-to-market capabilities and our technology capabilities of how we support and continue to extend our moat for Intellect being AI-first growth agenda. I would now request Vasudha to share the financial details.
Thank you, Manish. Good evening, everyone, for joining us. Let me take you through our financial performance for the first quarter of 26-27 and then provide a broader perspective on our last 12 months of performance, which in our view is the best indicator of the structural progress we are making as a business. So Q1 was another quarter of healthy growth, disciplined execution, and strong cash generation. We reported a total income of 872 crores, representing a 19% year-on-year growth over Q1 of 25-26. Our license-linked revenue comprising platform license and annual maintenance revenue increased to 457 crores, up from 389 crores in the corresponding quarter last year, representing a 17% year-on-year growth. Moving to profitability, EBITDA increased to 194 crores compared with 176 crores in Q1, while PBT increased to 135 crores compared with 126 crores in the corresponding quarter last year. Our platform-led operating model continues to provide operating leverage even as we invest for future growth. Next slide. Let me now turn to what we believe is a more meaningful perspective of the last 12 months. On an LTM basis, our total income reached 3,299 crores compared with 2,690 crores in the previous corresponding period. License-linked revenue increased significantly to 1,734 crores compared with 1,324 crores a year ago. Platform revenue nearly doubled to 595 crores, while license revenue increased to 554 crores and AMC to 585 crores. Our LTM EBITDA increased to 721 crore compared to 646 crore in the corresponding previous period, reinforcing our ability to scale profitably while continuing to invest for long-term growth. Our LTM PBT has crossed 500 crore as of Q1. Another important highlight this quarter is our collection performance. Collection for Q1 increased to 763 crore compared with 586 crore in Q1 of last year, representing a growth of approximately 30%. This reflects disciplined execution, healthy customer collections, and continued focus on our working capital management. Looking at the broader picture, LTM collections increased to 3221 crore compared with 2401 crore in the previous corresponding period, representing a growth of approximately 34%. As of the end of the quarter, cash and cash equivalents stood at 1269 crore compared with 976 crore in the corresponding period last year, representing an increase of 13%. So this healthy cash position provides us with the flexibility of continuing to invest in AI, product innovation, strategic market expansion, and long-term growth opportunities while maintaining a strong and resilient balance sheet. In closing, we believe the financial performance this quarter reinforces the structural strength of our business model. Thank you.
Thank you, Vazza. Now we open it for the Q&A session. Please click on raise your hand to ask a question. Once again, I say, please click on raise your hand to ask a question. First we have Meet Mehta. Meet Mehta from Prasun Exponential. Meet Mehta.
Hi, am I audible?
Yes, Meet Mehta.
Meet, you are audible.
Yeah, the platform business saw quarter-on-quarter, and how should we look at the?
Meet, your voice is breaking. Can you repeat the question, please?
Meet, can you come again?
Hello, am I audible now?
Yes, you are audible now. You can ask your question.
Praveen is not audible. Yeah, maybe we can.
Praveen, Meet audio is not audible. You can move to the next person.
We can move to the next person. So then the second we have Ruchita Kadge. Ruchita Kadge from CJ. Ruchita?
Sir, hello. Am I audible?
Yeah,
Yes, you are.
Please go.
Yeah, so basically I wanted to ask on the platform revenue side. So we've usually seen a Q-on-Q growth because it's a recurring kind of business. But this quarter there has been a degrowth in that Q-on-Q. So what led to that, and how do we see that number going ahead?
See, first of all, I mean, the same thing that we've been saying in every investor call, not to measure us on a quarterly basis. Because last quarter was the last quarter of the financial year, previous quarter. And so there has been some true-up in some of our teams, and so you see some spikes. And there is nothing like a degrowth. It's still continuing.
So I understand on the license part of it, right? Because it's kind of a bulk revenue. But I'm talking more on the platform revenue side, right? Which is recurring in nature. Like if you get that, it has to come, right? Incrementally, it has to get added, which has gone down.
If you look at the quarter-on-quarter numbers, say for example, if you look at the first quarter of last year, it was about 165 crores, and then it was about 137 crores. So we are still in the same line. We are about 140 crores this quarter. It's not significantly changed. Just that in the last quarter we were able to get some additional revenue because of the true-up of some of the subscription deals that we had contracted, and that is the reason.
So is it like some of those subscriptions have now ended and further we'll now have to add more customers?
No, Ruchita, it's not like that. See, many of our contracts are based upon the transactions, especially in the subscription space, where we are typically, take a case of Magic Submission, where it totally depends upon how many transactions or how many policies are being processed by the platform. Like Vasudha said, last quarter was the final quarter of the financial year. So we did see a good spike in the transaction volumes in the last quarter. Nothing to worry about. Yeah, this is a consistently growing platform revenue. Yes, last quarter was a spike, so that's the reason perhaps you see an aberration.
Let's look at the LTM basis. It's close to 600 crores. And it's a double of what it was 12 months ago. So the average rate is
So we should not look at it quarter on quarter. We should look at it more annually, you're saying again.
Absolutely.
Yeah, this is not customers run off. There are spikes. Some contracts have, if usage goes up, we get that spike in. But over a 12-month period, if you average that out, that will give you what the average is. And if you look at on a 12-month basis, it's close to 595 crores.
Okay. And that should grow at whatever the company is growing at, right? Annually 15-20% of growth. That's how we should look at.
That's where we are investing and moving towards.
Got it. And on the expenses side, do we see a gradual reduction in it? Because we still see like around 120-130 crore above what we were doing earlier, right? Earlier it was 550 crores, which we used to do quarterly. So when do you see that scaling down, the expense part?
Expenses increased by only about 14 crores from last quarter to this quarter. So it has not...
Quarterly, yes. But earlier, right, we were at a run rate of 550 crores. Then we increased it for AI and employee cost has gone up because of the calibration of the new company, like a new segment which we took from a particular company, right? The Canada base. So that's why I was asking, like, do we see that it should reduce, or you see that incrementally now the addition should be lower?
See, last quarter, we specifically made some investments in Purple Fabric that we called out at the beginning of the last financial year itself. And we made an investment of close to about 72 crores. And but this quarter, we have not made any incremental investment. So in fact, out of the increase of 14 crores last quarter to this quarter, 7 crores is on account of ESOP cost. So and the remaining is anyway the BAU cost. We don't see any major increase in the cost, but of course we do have some plans to make some investments.
Thank you.
Thank you, Ruchita. Next, we have Mr. Rahul Jain. Mr. Rahul Jain from Daulat Capital. Rahul, please unmute you. Yourself.
Hi. Thanks for the opportunity. First of all, congratulations on strong license win during this quarter. Can you just talk about how we are seeing the momentum right now? Are we seeing there is an increased demand toward license-based deal wins, or we are seeing incremental trend towards subscription-based demand coming within our customer base? That is part one of the question. And secondly, just on the cost side of it, we are seeing cost increase quarter on quarter. I understand we are investing into the business, but is there a point where beyond which we think the operating leverage should start playing out with this kind of a growth? Thank you.
Rahul, if you look at license as well as platform, in revenue for that in this quarter, as well as on an LTM basis, it's consistently close to each other. Those numbers are. different quarters, different models are pursued, different segments of customer, either platform or license. So that balanced approach is keeping up. The intent is to grow the platform revenue. That's why if you'll see on an LTM basis, it's doubled up from that perspective. The license used to be a stable revenue for us. Platform revenue is growing, and that's where we are making investments on AI to support all of this.
To respond second question, I think that Ruchira asked the same question to Vasudha on cost side, 550 crore to 677. Total cost this quarter is 677 crore. Versus 663 crore last quarter. So those costs are now basically inherent in the cost. If Purple Fabric investments are done, those mainly in technology business, the people cost. So people cost remains constant, it doesn't come down on quarter. So we'll not come back to 550 crore cost base. So if that is the expectation which is there. The operating leverage which Rahul is asking will come in that this quarter we didn't have a salary increase. The cost of headcount increase, it remained constant. 7 crore went into RSU, ESU, ESOP and RSU, and remaining 7 crore went into additional event marketing, travel. Those are the costs it went into. So there is a good news is that headcount cost and whatever the salary increase cost is there, it got accommodated into the same cost structure. That's a very positive news from that perspective that operating leverage can start coming now.
So, sir, just to conclude from your remark which you just mentioned, so is it safer to assume, given that we have decent growth momentum thought process, on an annual basis, we should be improving the EBITDA margin on a FY27 to FY26 basis?
Sure. You can assume that.
Probably you've seen last 2 quarters are above close to an 850 crore mark. From a 700 crore mark to 850 crore mark, the needle has changed. I think where we need wishes is how soon we can get to the 900 crore mark. And that's what we are driving.
Yeah, I'm sure you would achieve it soon. Thank you. Best wishes.
Thanks, Rahul. Next, we have Mr. Neil Chabra from Recite Ventures. Mr. Neil Chabra from Recite Ventures.
Hi, good evening, everyone. Am I audible?
Yeah, please go on.
So largely, if we think about on a run rate basis, we are at 3,000 crores of revenue right now with over like 6,000 employees. So if we look at revenue per employee, we are roughly at 50 lakhs. And if we look at our peers like Oracle, they are doing roughly 1 crore per employee. Or Temenos, they are at 1.5 CR. Or even Encino, they are at 2.5 CR per employee. Like I understand, like partially this is because we have a service mix in our business as well. But directionally, where do you see this moving over, let's say, next 3-4 years as our platform and licensing revenue increases? Where this number could go like? Like how internally as a management we are looking at this number?
Yeah, I think it depends on the investment a company is making. We have a 1,200 people research team in the company to sustain this growth. If you cut down those 1,200 crore, 1,200 people, we can increase the margin by 400 crore. Sorry. So the question is, a lot of time, company doesn't invest sufficiently for keeping the momentum. We grew from 600 crore to 3,300 crore in last 10 years. Like Q revenue growth number from last 10 years is not the same percentage-wise. So it's obviously operating leverage will come in. So your question and our questions are same, that operating leverage on the per head count. Your good metrics is there 50 lakh per employee. We'll move towards 60 lakh or 70 lakh or 80 lakh, but I think we don't measure that. We measure what is required for strategic business. We invest that way. So we are not running on this metrics of a headcount metrics or a revenue metrics. So those metrics are not part of the business agenda. But yes, to respond, this will improve definitely.
So like if we look at division wise, like obviously IGTV has a different kind of maturity, IGCV has a different kind of maturity. and the economics would look completely different given the life cycle or the stage the business is in. So if it is possible for you to just showcase like at scale, like I think I'm sure IGTB must be doing like over 40% operating margins given their scale. But if you can just give a breakup if possible of division wise, if management is comfortable doing that in coming quarters.
Neil, that's the number we usually talk about during the annual thing because it won't be right to talk on a quarterly basis. But your point is very valid. Definitely, each of the businesses are at different stage of maturity. So usually we do not go ahead and disclose this at a quarterly level, but definitely when we have the annual call, we will talk about it.
The last quarter we did that, give the shape of it.
We don't disclose it and then
Headcount is not what we looked at.
Like not on the headcount basis. Like I'm just saying maturity basis. Like IGTB is mature. At mature stage, what margin it is making. IGCB is a young growth company at what margin they are making. Purple Fabrics could be completely new. They might be loss making as well, which is completely fine given the life cycle of the business. But I was just asking like, how do we look at like as the business matures, what does trade economics look like? This can give breakup of that in coming like on an annual basis only. If you can do that in coming years, that would be helpful to gauge.
Yeah, the only thing you can look at it, you're right, perfectly right. IGTB will be operating at a much higher margin here. Our headcount revenue from IGTB will be much higher than the 50 lakh average. That'll be at least 30-40% higher than our current numbers are. Our GCP will be in the same range, or AI will be in the slightly middle range. So that indication we can give that all the three maturity index that you are plotting is perfectly in line. As of now, we don't declare that number to unnecessarily make one business look smaller than another business. It gives a feeling to the employee that whether I am performing better than others. So it's not a practice we want to create that observation in our employee community because results are seen by employee community also. So that is not the appropriate metrics. But from your perspective as an investor, what I'm giving you an indicator that every mature business can go to same number at flex Q number. So if that is the number you are looking for, GTV will be closer to in next 2-3 years, closer to the flex Q profit margin number.
All right. Thank you so much.
Thanks, Neil. Next, we have Mr. Arvind Arora from A Square Capital. Mr. Arvind Arora from A Square Capital. Arvind? Arvind, you are there? Mr. Arvind Arora?
Yeah, hello. Am I audible?
Yeah, please go on.
Yeah. So, sir, what's our R&D budget for the current year and the next year? If you can throw some lights on that. And and when can we expect magic in the numbers of this hard work that we are putting?
What is it? Sorry. First is simple that we spend $20 million in R&D, and each year on year, dollar will get you more budget for us. So we have 160 crore last year. It will be 180 to 200 crore with the R&D budget for this year. Up to 200, it can go up to 200 crore for this year. 180 to 200. What is the second question you asked?
So what's the area of the focus on this R&D where we are spending?
We are spending in AI, eMAC, the two platforms which is Manish has highlighted, eMAC and Purple Fabric. Purple Fabric is a core area. It's a huge potential which is there. We have filed 28 patents in Purple Fabric. So this is the area where as an investor, after multiple conversations, still your focus is on lag indicator, and as an investor, you're not looking lead indicator. So your questions are not on the lead indicator, your questions are on the lag indicator. If somebody, Silicon Valley investor would be there, then he will be looking at the lead indicator investment rather than a lag indicator investment.
And I share two levers of AI. One is externally, second is internally.
So that's where I think we are very bullish about what the potential is Purple Fabric is going to offer for the R&D expense, which is peanuts compared to the AI space where people are investing $200 million a year. We are investing $20 million a year, which is across multiple lines of business. So So that's a current state, but AI is a core area of investment.
Understood. And sir, like earlier you used to mention our focus is on incremental 100 crores. So now, if you look at our base, it's increased drastically. So now, like how we are looking internally, like still we are looking incremental 100 crore, or is there any shift on the target part?
No shift. Every 3 quarter, 100 crore increase.
Okay. So then, sir, our growth would not be like at a 20% at least if we are focusing only on 100 crore.
Don't ask the last point question. You right now seeing 19% LTM basis. You're seeing last 6-7 quarters consistent.
23% LTM.
23% LTM. The last 2 quarters, close to 850 crore operating income. Let's just state less and focus on performance.
Okay. Thank you, sir. All the best.
Thank you.
Thanks, Arvind. Next, we have Mr. Kushal Goenka from Mangal Keshav Financial Services. Mr. Kushal Goenka from Mangal Keshav Financials.
Kushal, you can ask.
Kushal is there? Kushal?
Hello.
Kushal.
Am I audible?
Please go ahead.
Please go on.
So my question was more on the gross margin side. As per my limited understanding is that once if you are moving up the value chain, like I'm extrapolating from the likes of say manufacturing companies, when those companies move up the value chain, the gross margin should inherently increase. So if we are moving up the value chain to Purple Fabric and eMACH.ai, shouldn't our gross margins, which is around 58-59%, should increase, and that should lead to an increase in EBITDA margins also. So I just wanted to know a thought on this, and also like coming to the numbers, like if we see we did around 350 crores of PAT, and I think so still we are on a like-to-like basis. I think so we would cross that number this year after say like 4 years. So just wanted to understand, if we are moving up the value chain, shouldn't the gross margins and then the EBITDA margins and hence the PAT should have increased? So are the ROIC of the investments that we are doing, the R&D investment?
First of all, I think you compare technology. This is a mistake
that
of India.
generating a higher returns.
This is one of the first issue of Indian investor. Are you comparing tech company with a manufacturing company? Now, definitely, these margins will go up. One day it will go up so much that you'll find excitement over there. So the question is not about which metrics we are tracking. As analysts, you track all the metrics. As a business leadership here, we don't track these metrics. We look at it, market trends, forward-looking patterns which is coming in a market. What is the right investment to be made? If we have to make the company for next 20 years survival, 20 years is a institution which should grow year on year for next 20 years. Our focus is that. Our focus is whether the headcount is so much, per headcount revenue, per gross margin 56% become 58% or not. Those are very micro focus numbers. Those numbers will automatically come if we cut down the investment. We are making the last year was a major investment. Rahul has asked a question, if my headcount cost remain at 680, 600 to 700 crore is cost remain there, then whatever revenue growth will come, it will come to the bottom line. So you just extrapolate from that perspective as a lead indicator perspective. If 900 crore is a number, 950 crore is a number, and my cost remains 700 crore, it will be a 250 crore EBITDA. It's not a rocket science to look at it, that number which will coming through at next 2-3 quarters. But we don't want to drive our business towards that. Our driving is towards what is right for the customer, right for the market, and right for the sustainability and the growth. Growth by design is the point Manish has mentioned. our focus is how many companies in India grown and crossed 3,000 crore revenue. Most of the companies stuck at 800 crore, 900 crore, just because the investments are not complete. So this is the core strategy as an investor you need to understand. Intellect theory of Intellect is 4,000 crore, 1,000 crore. We mentioned about 2 years back or 1 year back, 1.5 years back that will be 4,000 crore by 28, 4,000 crore and 1,000 crore. I think we are running on those milestones, and 4,000 crore and 1,000 crore is a good number for us to look at the investment thesis of investment thesis.
Predictability and quality is what we are focused on, and we continue to drive.
But if you compare quarter to quarter, platform to this, I think all are market is so variable. No, and you don't want to get stuck in those areas. Like some of the companies, when 3 years back you asked the question, platform revenue should be more. What happens to license revenue? We mentioned that it will be hybrid model. It will never be a total platform. And many questions were asked. This company has stopped giving a license revenue. This company has stopped giving. If we understand the customer behavior, we react as per design thinking to the customer behavior and act accordingly. We don't get by the patterns of trend, and that's a very myopic view of driving the business, sustained business.
Okay. Thank you so much, everyone. That's helpful.
Thanks, Kushal. Next, we have Mr. Vivek Taruga. Mr. Vivek Taruga from Best Paul Advisory. Mr. Vivek. Vivek, you are there?
Am I audible?
Yeah, Vivek, please go on.
So Arunji, you were not there in that con call. 2-3 con calls back, there was a mention about tailwinds in mainframe to modernization. Can we and then you are building up the capacity for it. So can you comment on that?
I just announced also a senior leader with mainframe background. We have added in the team. That's why investments are happening. So we are working with cloud partners also, hyperscalers, to bring from mainframe to cloud.
So are we winning or are we confident? Or I don't if you can.
We have multiple wins we have announced where we're moving from mainframe to cloud. How do you move it at scale is what we are looking at.
So second question is you mentioned in the first slide, Manishji, that you have an unfair advantage in the last 5-6 years of eMACH AI plus Purple Fabric. If you can go deeper, because of these two, how has our deal win rate or vis-a-vis the competition? If you can explain us why should we think it is an unfair advantage? I understand the technology part, but when you compare in the market, what are the kind of deals, or is it what is that unfair advantage helping us? Is it sales cycle is becoming lesser, or so? If you can explain that.
Good question. I'll give you an example of 2 of our young platforms, trade finance and lending. There are far more mature platforms out there who have been ahead. Like in some platforms, I am ahead of everyone else. Our win rate suddenly over there is growing because we're starting with AI first. Rather than conventional battles, we are able to demonstrate modern new technology with AI first. That's driving wins for us. And that's what you're going to continue to see. Embedding all number of CPX you are seeing, AI first in there is making that difference. So eMACH just as an architecture which is composable, hyperscalable, plus AI first, and then Purple Fabric as a platform, which is significant in North America for my insurance as well as individual platform deals. So they are dual engine right now.
So you think what way is it is it convert? I don't know if I'm able to is it only in 2-3 products or across the products we are finding unfair advantages?
Across the products we are implanting. I'm giving you examples of some of my young platforms where I would have taken much longer to win at the rates I'm looking to win. The mature platforms are continuing to create an expansion because AI first is there. You saw a number of Middle East deals I have announced. My dominance over there, why is it continuing? Not just because of what I had before. It's the AI capabilities which is making that industry-specific innovation.
Okay. So my third question is this may be like repetitive, but please for the greater clarity, because Arunji mentioned he will conduct some Concall for investors on AI and we couldn't do it. So whenever we speak to many institutions like Bajaj Finance or HDFC or even Equitas, when we went for Analyst Day, many were mentioning that there's a lot of software that they are trying to build in-house more than before because of people call it vibe coding, whatever. So what is your view? What part of the software are they doing more in-house? Okay, I understand few people can do, not everybody can do, but how are you seeing this trend that build versus buy? Is it like, are you seeing any pricing pressures because of it? So, because it's a little bit confusing. This part is confusing because there are institutions which are still buying, but there are institutions which are saying, no, we understand our business better than the vendor. So, we have allocated to the technology guy and he will make sure we build a. So what are they actually trying to build? Is it like the system of record that you apply or on the top of it? So if you can be more, if you can give any clarity on it.
And this trend is happening. There are some of the adventurous banks are doing this, and this adventurous bankers comes in every now and then. When internet started, they started building their own digital platforms, and they start knowing that I can build digital application. Then after 10 years of their failure, they started going to YONO, with spending 500 crores. Before YONO, State Bank of India was building their own internet platform. They believe that they can build, anybody can build applications. So I think this trend of Anthropic giving a promise, of Claude giving the promise that you can build your own applications, to me, few banks will succeed, but they will be spending more money than the buying decisions. But anybody who is building their own platform will have to spend more money because they have to maintain the technology. They have to upgrade the technology, the cost of technology upgrade in a long run. But those capacities are available in large adventurous company and a big pocket for them to spend on money. It's a last 30-year trend. All in-house development processes led to the translation to some product companies. So that's a.
So you are not finding it a problem for winning deals or pricing or so. Sorry.
It will happen. I think this trend will happen, and they will come back. They will come back after 2 years, after 1.5 years. They will come back, and few people will succeed, which is very good for them because they have a deep pocket to invest in the money. Today, JP Morgan has spent from $6 billion, $5 billion. Should they be spending $5 billion for running a technology?
$20 billion technology budget, $2 billion just for AI.
$20 billion. Now, $20 billion for JPMC, why should they spend? If they buy the technology, they should not. Even their technology budget is bigger than any technology company itself. So those are the things which make some decisions. Once you do it yourself, then obviously the cost goes up.
So I will also add on one more thing. If we rewind ourselves 18 months back, when new technology came, we were also very bullish. Cursor, we will just write the code overnight. We realized it's not writing the code overnight. The discipline which is required to make things deterministic, putting guardrails, guide rails. Each one of us writes the same query on OpenAI, ChatGPT, we get different answers. Why? AI can solve even a minor search, it can't give consistently. So all of us go through that. I personally went through that. But now we've invested very significantly with Purple Fabric to ensure deterministic remains there. This is not a financial world is not probabilistic. You can do some of your surrounding applications, productivity, those things very good. These are core infrastructures of banks.
Got it. No, I understand, but I just want, sir, last question is, sorry, Arunji, you were explaining something, please.
I'm saying a lot of service companies are going to bank now because they say, I'll help you build the bank products. There's another trend we have heard in the market because they are repositioning the service business to a product business. So just to bring to your notice, you will hear that thing from the service company that we can build products.
But that is not. Despite this, we can continue around 15 to 20% growth with all this because this keeps happening in your view.
We have 8 markets here. Some markets will go up, some markets will come down. So now only 2 markets we are not present. One is Eastern Europe, one is Latin America. So 9 and 10th market will add over the period of time. So whenever we are going to add those markets.
We will never be in Japan.
Japan is here. Yeah, Japan also we need to. Japan and Australia we have to invest money. We are present there, but we are not invested money.
And those are next four markets: Japan, Australia, Eastern Europe, and Latin America. Latin America has just announced a deal in Mexico, so it's adjacent to US. So we keep going adjacent markets to where the core markets are.
So, I'm sorry, repeating the same question. So we will do a 15-20% growth even with these trends, right?
Yeah.
So last question, Arunji, you have carved out a Purple Fabric as separate entity, and then you also mentioned too when you were doing the first Purple Fabric investor meeting that we are going the pace of addition of clients would be drastically different in Purple Fabric because it can be more horizontally done. So any reasoning why you carved out, and are you seeing any big traction over there, or any what is the is there any financial reason to do that? So like that.
We are working on 3-4 technologies in Purple Fabric, and that is a right question I would have expected today in the first question, that what are you doing in AI and why we are believing we are so bullish about AI and why do we need a separate LOB? These are 3 questions which we are asking after half an hour. I found that there is a lag indicator, investor circle versus lead indicator, because that is where the underlying future value of gold mine is sitting there, because there is a tailwind for AI. We have cracked one of the important points which Manish has looked at it. Multiple technologies in last 9 months. We have cracked complete deterministic knowledge grid, because AI accuracy in industry is less than 80%. A lot of times AI is used for co-pilots are used for only value upgrade, cursor are used for just coding, but none of them is delivering the value. Today we have designed a technology which has got a accuracy, substantial accuracy, which will be launching in next 2 months. And this product has a ability to reduce 3 months effort to 3 weeks effort. And that is under the marketing GTM we are working on. We are testing this technology within Intellect. This technology has been tested in 78 different projects at Intellect. We piloted the technology on 15th of May. Between 15th of May to 15th of July, we have reached 78 projects using this technology. Very early signs are effort can come down by 60% total for the same project size. So now you suddenly as an investor, you will jump onto point, what is the headcount reduction? I'm saying the lead indicators show that this is happening. It will take another 3 months for this technology to reverse engineer our processes and systems, which is designed on SDLC. How do we move SDLC to AIDLC? And that is where many transition in the company we are working on, that new methodology will evolve. New methodology will be more participating with the customer. And this technology is so magical that within 2 hours, I can show to the customer his spatial graph of his application, which nobody in the world is able to do it. It's beyond Anthropic, which is doing using Claude. And that is where the significant potential is sitting there in AI world at Intellect.
So you have carved out because we are looking at new technologies and it can fasten our, like, is there any other reason, or is it just that it is going to address a different?
It's a different company altogether. It's a technology company. Purple Fabric is a technology LOB. And this is a product LOB. So,
got it. So, okay. You will, sir, and Arjunji there's a request that you told you will conduct a con call for investors explaining these things.
In the next 2 months, we'll do the AI con call, and then I think we should look at an investor meet also before the end of the year.
Or we can do let's see. It's pending on me. We'll do it.
So the last, just one small clarification. So with all this, given the future outlook, we are confident of 15 to 20% growth, right?
You'll continue to get the same answer.
Thank you. All the best, Arunjan. Thank you very much.
Thanks, Vivek. Next, we have Mr. Ravi Mehta. Ravi Mehta from OneUp. Ravi, please ask your question.
Yeah, hi. Thanks. Just wanted to know if the newer deals where you are embedding Purple Fabric with eMAG, is there more customization as a new norm? How does these deals happen?
Can you repeat the question, Ravi, please?
Yeah. So, see, what sense I got is that Purple Fabric is getting embedded in a lot of eMAG deals. It's kind of a blended offering. So, in such kind of deals, is more customization a new norm, or how should
No. So just think of what is business operations. The operations flow is taken care of by eMAG. The intelligence flow over there is being taken care of Purple Fabric. As the intelligence flow consumption will increase, you will see magic happen. The hockey stick you are asking for, it will start returning there. Because the units of intelligence flow are different from license.
Okay. Okay. So it's not like every deal has to be customized as per the requirements. The platforms work in sync.
You're right, Ravi. We don't have to customize everything.
Yeah.
Because even in Purple Fabric, we have very well-defined solutions that sit on top of our eMAG.ai platform, and they work seamlessly with that. So there is no need for us to go back to the customers and undertake the customization exercise.
Sure. Also, I had a question on the internal use of Purple Fabric. What I was given to understand that a lot of internal piloting is also happening. So what is the kind of, I think you were just explaining about in the previous question about the efficiency cut down. So what is your take on the internal use of Purple Fabric in terms of efficiency and cost savings? What have you experienced?
Yeah, so this effort saving will be there. As of now, we are not looking for again, our focus is not headcount cut. Our focus is not about immediate cost saving. Our focus is how do you deliver customer faster. If I deliver the project early to the customer, if I can deliver 6 weeks before the delivery date and make a customer happy, that's the first focus for us. It will result into, I'm saying, from a effort perspective, I give an indication it can have a potential to save 60% of development effort. Now, that will come into action maybe 2 quarters later. It may come into 3 quarters later, but those kind of potential is there, and that risk is there for all the IT services company. That if development effort comes down by 60%, then it's a major risk for the industry.
See, I'm looking at number of Q4 go lives. Can I do them in Q3? The realization of revenue faster, delivering it first time right, and our portfolio 80-85% comes from existing customers, can actually start cleaning out everyone else.
Yeah. So I think I had a related question which is partly getting answered, that implementation revenue has been historically close to 45% of our revenue. Even we have grown to this level. Now, if this thing pans out, then that can shrink meaningfully if the rollouts are faster and your go lives are faster and the revenue recognition is happening. Is that a fair understanding of the revenue mix changing?
Don't think of that. We are not in a time and material business that if it happens faster, our revenue could reduce or things like that. It's a fixed price work. We do quite a bit of that from an implementation, and we drive productivity with that. So, like Arun said, 2 primary focus: deliver first time right, deliver 6 weeks ahead of what you have committed. That's where the focus is.
Yeah, so faster go live means faster revenue recognition also. I'm saying your license and subscription grow faster than the implementation because of the speed.
That is QED.
Sure. Okay. And just one follow-up, just a little bit number specific. Sorry for bothering this, but this quarter we had an exceptional license revenue flows, which still had kind of lower gross margins. So are there any direct spends on the tech side or AI side which we are recognizing in the software development line item? I just want to understand that are the spends for the future which are getting recognized here, and hence we are seeing a gross margin which is not as good given
We answered this question. If somebody next, we answer this, repeat the call, you'll find the answer.
Sure.
Initially it is answered, and this, maybe you are not paid attention to that.
I was there. I think somebody was asking about higher technology and all those things. My limited point was only higher license historically tend to slow down, but this quarter it hasn't. If I just look at, so are there any incremental spends that we are reporting software development?
No, simple thing is, don't break down, don't analyze the numbers. You need to look at it, the growth of 23% is good for you as an investor or not. This analysis of numbers, this license should flow here, should there, flow there. We explained it, 14 crore cost increase in this quarter, 7 crore is for our ESOP, 7 crore is for business development and travel. That's a cost increase which happened for that.
See, 23% LTM basis revenue growth, 31% license linked revenue growth, which is higher margin, close to 20% gross margin growth. These are all leading indicators which say we are in a healthy, and I think the management confidence of investing and delivering those investments to deliver this, I think that's what matters, right?
Yeah,
sure. Few quarters between, few growth between the quarters. If you look at the LTM growth, it's about 19% growth in the gross margin. And if you look at the current quarter's gross margin, it's 57%. So maybe if you had listened to some 3-4 quarters before, we had said that we would like to hover around 56-57% of gross margin. So we are anyway within our target.
Sure. Okay, thanks.
Thank you. Thanks, Ravi. Next we have Mr. Vipul Kumar Shah from Sumangal Investments.
Ravi, this will be the last question.
The last question. Mr. Vipul Kumar Shah?
Yeah, am I audible?
Yeah, please go on.
So, what is the cumulative spend we have done for developing Purple Fabric till date?
Cumulative cost.
So sorry, come again, please.
What is the total spend we have done for developing Purple Fabric till date?
Till date, we would have been over 700 crores over the last 8 years. Almost 100 years per year we have spent.
And all have been charged to P&L, sir?
Charged to P&L, yeah. Or whatever the capitalization we do.
Partly into P&L, partly into development. Up to the stage of doing a feasibility study, it will be into the P&L. Once the technical feasibility is done and the roadmap is clear, it will get into development. CWIP.
It's a part of the same 180 crore investment, yeah.
Okay, and lastly, we are going to demerge Purple Fabric into a separate company, right, sir?
No, sir. No, there's nothing like that. Are you suggesting, sir?
Yeah, I'm suggesting. Why don't you do it?
Okay.
What do you mean by having a separate this thing which you are in your press note?
Vipulji, it's a separate line of business so that the required and desired focus can be given to this particular initiative. We heard you in terms of the demerger, but as of now, there are no such plans.
Okay, thank you, sir, and all the best.
Thank you.
Arun,
there are 2 more questions are there. Should we close it or take the questions?
I think that are questions.
Yeah, please go ahead, Praveen. We can take the questions.
And actually, you should announce 3 questions before, not last minute 1 question. That's for the right pattern.
Praveen, go ahead.
Yeah. Next we have Mr. Pranay Jain. Mr. Pranay Jain from Banyan Tree Advisors. Pranay Jain?
Yeah, hi, can you hear me?
Yeah, Pranay, please go on.
Thank you so much for the opportunity. Just one question on Purple Fabric. I wanted to understand, the kind of things that we are doing on Purple Fabric and some of the deals that we have announced previously. can we kind of cater to more non-BFSI clients, which could possibly expand our TAM for Purple Fabric?
Yeah, we are using other unit called direct to corporate. They are APX and procurement space. We are expanding to other customers. So we are using Purple Fabric for non-banking clients.
Understood.
Already in motion, Pranay.
Got it. Okay. Yeah, that's it from my side.
Thanks, Pranay. And the last we have Mr. Sandeep Navira. Mr. Sandeep Navira is an individual investor. The last question. Sandeep?
Yeah,
Are
good
you
evening,
there?
everyone. Yeah,
Good evening.
am I audible?
Please go on.
Yeah, good evening, everyone, and thanks for accommodating my question. I think a couple of quarters back, we announced that we have some 14, 15 strategic implementation or partners kind of, consulting companies. And we said we will be using their domain expertise to extend Purple Fabric, in the respective domain. So has there been any progress on that? And the R&D, what we talk about, are we spending to extend Purple Fabric to other domains?
Now, using cloud partnerships and AI partnerships on Purple Fabric, the domain side is taking our eMAP products forward. The consulting companies, how we can go deeper with it.
Yeah, and if you're referring to the 14 value discovery agreements that we signed with some of our partners, it is still in progress. I think a lot depends upon this. Some of them we've already seen some success, but obviously there need to be certain solutions that we need to build using those partners and take it to the market. It's still again in progress.
Yeah, so can we expect something in the next couple of quarters so that it can become a new revenue?
Yeah, definitely we can. And that's what is our intent of signing with them. And that's where we are seeing the movement also.
Excellent. Thank you so much. And the last one and quick one. Is it possible to give the breakdown of revenue from the continuing customers, existing customers, and the revenue from the new customers as a breakdown? If that would not be too much, to report?
We don't disclose them. Yeah, we don't disclose that, and we don't have existing customers also, so you should be happy about it.
Yeah, no concern there. I was just wanted to know, what are the new customers we are adding. It's fine. Thank you so much. Appreciate it.
Thank you.
And all the
Thank you,
best.
Sandeep. And thank you, everybody, for joining today. In case still you have any question, please do write to us. Accordingly, it will be replied. Thank you. Now you can log off.
Thank you.
Goodbye.